And now for the detailed analysis. We first come to tenants, and we expect the tenant to be a company with strong fundamentals. In this case, SmartWorks is a leading provider of what they're calling themselves as workspace-as-a-service provider, which means they offer affordable and customized plug-and-play options for enterprise-grade clients, big companies, startups, and SMEs as well. SmartWorks has grown 3x during COVID, and the reason for their success is when SmartWorks takes over any particular property, they put in the capital expenditure, and therefore a company that's coming in like, let's say, a Microsoft or Amazon or Groww in this case, they don't have to spend anything upfront. So that's number one. Number two, all the utilities and management in terms of, whether it's the electricity, internet, even a canteen, all of this is managed by SmartWorks, where the company, the subtenant, or their clients save on a lot of these overheads, and therefore they're willing to offer a slightly better, rental to SmartWorks. Also, SmartWorks now is backed by Keppel Land from Singapore. They've got institutional backing, and Hurun India has named SmartWorks its future unicorn list. So they've got the who's who of Indian enterprises as their clients. Rishi, what do you think of the tenant industry outlook, the industry that SmartWorks is in?
So it's a fantastic place to be in. Looking post-COVID, COVID has taught a lot of things to a lot of people. So flexi workspace is the next big thing that's in the making. So if we look at it right now, the tenant industry is excellent to go be in, because this space has a lot of traction, a lot of backing, right? You rightly mentioned. There are a lot of funds, a lot of institutional backers who are right now looking for these kind of opportunities, and SmartWorks is very well placed in this particular segment. And when you look at the tenant stickiness, so when you have an asset that comes at a very, very good price to you, and you are in the business capital or probably the business district of a location, and you have a lot of traction from the clients, that's a perfect combination or a perfect mix for the tenant to be around in that particular space for a longer time. So in this case, SmartWorks is having a beautiful location, a great building, and an upcoming area where a lot of MNCs, SMEs, or startups are wanting to be a part of the space. So that's a beautiful combination to have. And that, for me, I think that's the reason both these points will have a great impact in our analysis.
Also, from a stickiness perspective, do you think that SmartWorks themselves spending so much of capital capex, making so much of a capital expenditure on the entire property where they've taken the entire building, that helps their stickiness?
Oh yes, Raj. So if you look at the co-working ecosystem, one of the biggest challenges for the co-working spaces was they expected the landlords to do up the capex, and that's the reason that they also used to move out earlier than the contracts were there. So post-COVID, there have been a lot of such cases. In this case, SmartWorks deploying their own funds shows their commitment towards the business and what they see as a future. So that's one of the biggest reasons that one should definitely look at SmartWorks as a long-term tenant and not a short-term tenant.
And what do you think about the asset grade?
So Vaishnavi Tech Park, of course, enjoys the location. It's at the Sarjapur Junction, which is one of the outer ring road location, which is very, very upcoming location. The building itself, it's a IGBC rated platinum rating building. So if we look at the entire development of the park, right now the images are shown, but as and when we see the videos of the premises and as and when the people come in, you see that the quality of the development is grade A. So it actually ticks mark all the boxes that are required for a facility that you want to house a MNC or a good tenant. So yes, as a asset grade, I would definitely want to give it a A grade asset.
and
coming
the
to
asset
the
location.
Yeah. So coming to that, if we look at the tenants in the vicinity that I mentioned, like the likes of Microsoft, Deloitte, HCL, Accenture, Oracle, LinkedIn, Wipro, these are to name a few. You have a lot of good tenants in and around this vicinity, and this location is upcoming with such kind of graded developments that are going to keep happening. So this is the business district as we call, and this enjoys a very good, excellent travel infrastructure, because all of this finally boils down to the employees having a good commute, and that's where the productivity gets affected or impacted. So this location is basically a 10-minute walk from the upcoming Bengaluru metro station, and also definitely enjoys the connectivity of the IT corridor of Bengaluru. So I feel that this location is very, very well placed for for an asset like this, and for a tenant ecosystem like this.
So from a lock-in perspective, we recommend at least a minimum of 3 years. In this case, they have 5 years, which is excellent. And a registered lease agreement is recommended. We've already spoken about it. So as and when the lease agreement is registered, we will upgrade our rating. Coming to the duration, again, 5+ years is recommended. And they have a 9-year agreement, which is excellent. The escalation, typically the industry standard is 5% year on year, or 15% every 3 years. In this case, we are getting 15% escalation every 3 years. So both these boxes are checked. Rishi, what about, is the rent starting immediately?
So in this case, the rent is actually going to start from the month of August. That is something that we had highlighted in our quick review also, that we always recommend that for fractional proposals, the rent or the ROI should start immediately for the investor who's investing in. In this case, it's starting from the month of August, and that's the reason we have given a little slighter lesser rating to this particular point. And yes, we also recommend that the ROI needs to be at least 8%. And in this case, at least it is very, very near 7.7. So it's a good case to have this as an investment portfolio. Also, we recommend that apart from the immediate rental, we say that the 6 months deposit, 6 and above, is something that we always recommend. That gives you a kind of security from the tenant side as well. Here in this case, it's 5 months, so I think that's marginally less, and we can definitely consider this as a good proposal to all in all go ahead with. Raj, what's your take on the capital appreciation for this particular location?
So capital appreciation, if you look at their financial model, MYRE Capital has a lot of options, but we are as a company, we are very conservative. So we don't recommend you to buy this basis of very high capital appreciation. 2 to 3% is something that we reckon we should be able to achieve. Anything above that is excellent, but we would strongly advise people against benchmarking this as, let's say, a 5% or a higher return and then going in to invest, because there are a lot of market dynamics that will play out in the next couple of years, which nobody knows, and therefore it's in our interest and it's in our investors' interest to consider it as 2 to 3%, and then of course if you get anything higher, nobody's complaining. In terms of the exit, as Rishi, you had spoken earlier, would you like to take that on?
Yeah. So for any fractional asset, like we had shared earlier also, it's definitely going to take some time for an exit as this ecosystem is actually developing. And if you rightly look at the way the beautifully the MYRE has also put across, that you need to treat this as a traditional asset, because you need to have that 3 to 4 months of timeline before you actually plan your exit. And the idea of horizon to invest should be not less than 5 to 7 years in this asset. There are 3 modes as you look at it. There is one total asset sale, when the entire asset is being sold out to another entity or a new investor, typically a fund house, maybe a private investor, after getting the 2/3 approval from the existing investors. So that's one of the way of exit. Second is annual sale, where the asset managers offers annual window there is one window per year which they will be offering for offloading your particular investment. But here you're dependent on the platform. And third is a private sale where you are actually free to sell to any buyer you can find, wherein Raj and me investing in Pre-Leased as a platform can help you with. So these are few modes of an exit which can be looked into. But yes, it will take some time for you to take an exit because this ecosystem is still in the mode of development.
And there's something mentioned about hurdle rate. What is that?
All right. So hurdle rate is something, for example, there is a committed rental ROI, which is committed to you from the from the platform. Now, when you're taking an entire exit, when the asset takes an entire exit to a new investor or a fund house, that's where what is the ROI that comes into the picture is something that, for example, if there is a cap of 12% and above, so if the asset management company is achieving 12%, then yes, there is no extra additional fee or a success fee that's being charged. But if it's say the ROI achieved is 15%, and that's the appreciation that has been got on the table, then out of that incremental value of 3%, certain portion is earmarked by the asset management company as their success fee. And in this case also, I think, Raj, would you want to take that up?
Yeah, so to kind of have an extension to what you're saying, if somebody has invested 100 rupees and in the first year, for example, that your hurdle rate is above 12%. So in this case, let's assume that you make 15 rupees, 15% return. So you will be charged a hurdle rate or a performance fee, typically about 20% on anything and everything beyond 12 rupees. So in this case, you'll be taxed or you'll be charged 20% on 3 rupees, which is 60 paise. And
Raj,
finally,
what's your take on the asset manager, and what would you recommend to our set of investors?
So MYRE Capital is one of the leading asset managers in the country right now. They've got over 100 crore of asset under management. And it's a venture by Morphogenesis, which is a world-renowned architectural firm from India. And given their solid background, because they are into architecture and they have great understanding of how structurally and design-wise the building needs to be, any property needs to be. Therefore, we've seen that when they're picking their assets, we can clearly see the kind of expertise that they bring to the table. And therefore, we definitely believe that MYRE Capital is a very credible asset manager and something that we would trust our money with. And finally, to wrap up, Rishi.
Yeah. So all in all, this proposal is a good proposal. We can always recommend. There are a few changes that we are expecting. That it becomes more attractive for investors. So yes, we would definitely recommend to know further about this or to understand further nitty-gritties of how this works, how it needs to be done. Please get in touch with us. Our numbers are on the screen. Probably we can get onto a call and we can guide you as to what should be done next.
So that's it. That's our review for the MYRE Capital's Vaishnavi Tech Park Fractional Ownership Opportunity, where the tenant is SmartWorks, and we are available to answer any and every question that you may have about either fractional ownership or this particular opportunity. Like Rishi said, our numbers are on the screen. You can also email us. Our email is also given on the screen, and we'll see you soon with another review. Thank you.
Thank you.